You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 14th day of February, 2024. And yes, it is Valentine's Day. Happy Valentine's Day to you. Let me check something. I had a reboot overnight. Go to my audio settings. That's on the right one. That's on the right one. Okay, we should be good to go. If not, let me know. Thanks so much for joining us today. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. We do two every trading day, one private, one public. First broadcast of the day from 9:20 a.m. to 11:30 a.m. Eastern. That's the private one. That's for our members only and those taking the 1 week free trial. If you have not taken the 1 week free trial, go to mytradingiq.com. And at the top of the page, there is a link. It says 5-day free trial, no credit card required. Click that, fill out the registration form. Typically same day, we'll get your indicators indicating, get your desktop set up, and then the following day, your trial will officially begin. I know it's the middle of the week, and you want to make sure you get your full 5 trading days. You will. Doesn't matter what day of the week or weekend or hour of the day you sign up for the trial. First, we got to get you situated. Then the following day, your trial begins and you get 5 consecutive trading days, even if it stretches over a weekend. Now, you're not just getting access to the live training room, that private broadcast that I mentioned earlier. You are getting access to everything our lifetime members have access to for 5 consecutive trading days, and we foot the bill. We think it's only fair that you be able to make a well-informed and qualified decision as to whether or not trading is really right for you before you even risk a dime with us. That's how confident we are in what we do and what we have to offer you. So again, mytradingiq.com, top of the page, click the link, 5-day free trial, fill out the form, be honest, okay? Otherwise it won't work. It's an automated process. Put some gobbledygook in the form and it'll just get kicked out into cyberspace and you or I will never see it again. Okay? It's going to probably take you 3 minutes tops. That's if you're slow like me. Now, every day when the live broadcast or the live training room ends, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There are 2 different ways to join this broadcast live. The best way, go back to mytradingiq.com. This time, scroll down the page to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. You only have to do that once. Going forward, what will happen every trading day, you will get an email about an hour before this broadcast starts. Now, that email has a link in it. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit of that is you have access to the question box so that you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from the desktop, but you still want to join live. You can. And there'll be days when you're just plain busy doing something else. You can't join live, but you do want to get caught up later. You can do that too. Of course, I'm talking about our YouTube channel, youtube.com/CFRN. You already know the YouTube part, so really all you need is the CFRN. Okay. Now, not only do we broadcast live every trading day, as we're doing right now, simulcasting, as they say in the biz, but we also archive each and every daily broadcast. Currently, there are over 2,400 daily episodes archived for your educational and viewing pleasure. Now, obviously, you're not going to watch them all, but if you're new to the world of CFRN, you really should scroll back a ways. 6 weeks, 6 months, a year, 2 years, 3 years, even more. And just pick some days at random and listen in a little bit, okay? You can fast forward through them and listen in, and fast forward a little bit and listen in. It's a great way to get to know who we really are. Not just today, not just this week, but you'll discover how we've evolved over the years. youtube.com/CFRN. Let's open with our daily devotional and a word of prayer, as we do every day. And we're finishing up our topic today on how to stop worrying. We've already covered it does no good. It is no fun. It makes us miserable. And I think I mentioned it doesn't fix anything. Now, in what other area of life would you expend so much energy on something that has no potential to bring about a positive return? Zero. Okay. So, obviously, then this worry thing is a very powerful tool that the enemy has. Whether you're a preschooler or the Pope, the enemy will use this thing called worry to drag you down every time you think you're about to break free. Our scripture today, Romans chapter 8, verses 31 through 39. I'm going to share from the Message translation, beginning in verse 31. So what do you think? With God on our side like this, how can we lose? If God didn't hesitate to put everything on the line for us, embracing our condition and exposing himself to the worst by sending his own son, is there anything else he wouldn't gladly and freely do for us? And who would dare tangle with God by messing with one of God's chosen? Who would even dare to point a finger? The one who died for us, who was raised to life for us, is in the presence of God at this very moment, sticking up for us. Do you think anyone is going to be able to drive a wedge between us and Christ's love for us? There's no way. Not trouble, not hard times, not hatred, not hunger, not homelessness, not bullying threats, not backstabbing, not even the worst sins listed in Scripture. They kill us in cold blood because they hate you. We're sitting ducks. They pick us off one by one. None of this phases us because Jesus loves us. I'm absolutely convinced that nothing living or dead, angelic or demonic, today or tomorrow, high or low, thinkable or unthinkable, absolutely nothing can get between us and God's love because of the way that Jesus, our Master, has embraced us. Again, that was Romans 8:31 through 39. Worry is our inability or unwillingness to trust God. I want you to remind yourself of this every time you start to worry. Now, I know that kind of hurts, right? Worry is our inability or unwillingness to trust God. But if we really get to the issue of worry, we have to admit that we just don't know if God will do what we want Him to do in our lives. So what do? We worry and ask questions amidst our doubts. Will He, here's the short list, protect our kids, heal our marriages, provide for our families, bring healing? The list could go on and on. Since we don't know what lies ahead, we must choose to walk in faith and trust the God we have come to know. When we remind ourselves of what He has done in the past, we can rest in the present and have hope for the future. There is so much we can remember about God, His ability and His character. Here's a few things. He is everlasting, never becoming tired or growing weary, while simultaneously depositing new strength in us. Isaiah 40:28. He is our provider of help, never sleeping, but instead watching over us. Psalm 121. He grants overwhelming victory to us and never allows anything to separate us from His love. That's our scripture of the day, Romans 8:35 through 39. He holds our concerns because He cares so deeply for us. 1 Peter 5:7. This God, our God, is the one whom we can trust. There's no one like Him anywhere, ever. He's all-powerful, all-knowing, and present all the time. There's never a place where we'll be that He's not already there. He guides, comforts, supplies, strengthens, and provides for us because we are His children. And He adores us. Reminding ourselves of this and living it out every day should help us eradicate the symptom of worry from our lives. We weren't born to be worriers. We were born to be warriors. The same power that raised our Savior from the dead is available to us through our Heavenly Father. Here is what God says about us. He says that we are His children and co-heirs with Christ Jesus. Romans 8:17. He calls us more than conquerors in Romans 8:37. In Ephesians 2:10, He created us as His masterpiece and His workmanship to do good works. He has chosen us, and we are His very own possession. He has called us out of darkness into His marvelous light. 1 Peter 2:9. Eliminating worry from overtaking our lives just takes intentionality on our part. We have to stop toxic, worrisome thoughts so that they don't stop us from living the life God has called us to. And we do this by claiming and applying God's truth to our lives and trusting Him in faith, since we can't see what tomorrow holds. Our God is good all the time and has the very best plan laid out for us to be a part of. I hope what we've discussed these last few days will help you slay this tool of the enemy, this thing called worry. Join me in a word of prayer. Heavenly Father, we thank You for the unshakable assurance that we find in Your word. You are our refuge and strength, our ever-present help in times of trouble. We take comfort in the truth that nothing can separate us from Your love. Lord, help us to hold fast to this truth, especially in the midst of challenges and trials. Strengthen our faith and grant us courage as we face the uncertainties of life and the complexities of this trading world that so many of us are involved in. Lord, may Your love be the anchor for our souls, grounding us in times of uncertainty and lifting us up in times of doubt. May we live each day with confidence, knowing that we are more than conquerors through Christ who loves us. As we engage in our daily activities, from our families to our business, to our trading, for which some of us, it is our business, may we do so with hearts filled with faith and trust in Your providence. May our actions reflect the love and grace that You have lavished upon us, and may we bear witness to Your faithfulness in all that we do. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. And again, happy Valentine's Day. How many of you know the history of St. Valentine? Well, if you don't, you can Google it because I'm not going to share it right now. What I'm trying to do is to get my data to load here so I can give you the numbers from around the world. Here we go. Now we're cooking. Oh, what a powerful sell-off we had yesterday, eh? You were tuned in yesterday, then what happened after the broadcast was meaningful, I guess, to say the least. Starting in the U.S. with the cash markets, or the indices as they're called, Dow is down 8.5 points. The NASDAQ is up 65. S&P 500 is up 13. And the Russell, our man in the street, is up 21 points, which is a little over 1%. In the commodity basket, crude oil down 64 cents, trading 77.23 last. That's a drop of almost 1%. Gold down $2.30, trading 2,490 last. Silver bouncing back up 28 cents, trading 22.43 last. Silver, that's a gain of 1.25%. In the Asian markets at the close, the Nikkei dropped 260 points. Shanghai rose 36. The Hang Seng up 132. Now, for the Shanghai, even though it's only 36 points, that's a gain of 1.25%. The Hang Seng up 132, that's almost 1%. And in the European markets at the close, FTSE up 56, the DAX up 64, the CAC up 52. So that gave us a mixed day in Asia. It was a green day for the UK. And we're going to call it a green radio Wednesday here in the US of A. The Dow shows unchanged, but it's up almost 1 point. And with the Russell leading the pack up over 1%, I'm going to go out on a limb and say the Dow just might follow it today. Now, you can't build a strategy on that because it doesn't happen that way every day. That's one of the first things when people learn to trade futures. Oh, and they'll spend a lot of time and energy on figuring out which index moves first so that they can trade some other index that they know is going to follow it. Well, there is always one that moves first, and then the others do follow. But there's no consistency, rhyme, or reason to which one is going to do which at any given time. Oh, I was just reminded by Jerome, today's Ash Wednesday. That is, I believe, a Catholic thing. If you see people today with little smudges of black on their forehead, it's a pretty solemn holiday, I believe. My wife, if she were here, could tell you, but she was raised Catholic. So thanks for sharing that, Jerome. And happy Ash Wednesday to all of our members in the audience who are familiar with what that means. And the rest of you, Google it. You'll figure it out pretty quick. Okay. So, Dow now just went negative 2 points. So I guess it's really not a green. Thank you very much, Jerome. Wednesday, about 40 days before Easter. Okay, gotcha. There you go. You don't have to Google it now. He just told us. Thank you very much for that. All right, let's take a look at Logic 247. Now, if you remember, we started the week with one alert Sunday night. It got stopped out. It then went on to hit its target and then some. But Monday, we had 100% stopped out. We're in week 289, and over the last 289 weeks, we've issued over 16,000 individual handcrafted alerts. We've averaged 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our lifetime members in their unlimited one-on-one mentoring sessions. This week, only 12 alerts so far. 4 of those still waiting. Now that was as of 7 a.m. Eastern this morning. This has changed to a degree. I've put out additional alerts and maybe something has triggered that, was still waiting. But Valerie will update the recap this afternoon as she always does. So at the time she did the recap this morning, we had 8 actionable alerts, of which 1 or 13% would have been stopped out based on market structure. And that very simple process we teach all of our lifetime members. Okay. Now the logic alerts can come out at 2 a.m. or 2 p.m. Futures trade around the clock, and we have traders around the globe. So it could be 2 a.m., it could be 2 p.m. Our day session is their night session and vice versa. That's just one of the things we really like about futures, is because you can trade anytime, day or night. It's really useful for those who still have their full-time day job. It's kind of hard to trade stocks at night because the stock market's closed. Futures opens up a whole new world. There's a long laundry list of reasons we like futures. I won't go into them all, but I will say that you can purchase one S&P 500 Emini contract during the day session from some brokers for as little as $400. At Daniels, it'll run you $750, I believe. And you're controlling, at current prices, $250,000 of S&P 500 best of breed equity. But it's margin. That's just a term, okay? You put money in your account. You're using the money in your account to trade with. When the trade is finished, if you made a profit, that's going to be added to your account. If it was an unprofitable trade, that's going to be subtracted from your account. So don't get hung up on all that. Everybody lost their house when the dot-com bust came because they were over-margin. Stock margin and futures margin, 2 different animals. Yeah, they're both called margin, but you Google it. Or we can go over to Thursday night in the members only workshop. If you have any concerns and or reservations, whatever they might be. All right, I did this already. See if that works. There we go. So anyway, 13% is where we're at. We were 25% yesterday. Monday we were at 100%, so things change. There are a few more alerts out today, but not a lot. And when we go to the charts, you'll see why. Now, again, we're in week 289 of Logic 247. But long before there was a Logic 247, there was a thing called the concierge trade alerts, which we still have and always will. They're different. William, I just saw you had put a question in the discussion group. I'll take a look at it and answer it as soon as I can. The CTAs do not come out around the clock. They're posted as a static report shortly after the Globex open. So today's the Wednesday session, but it started last night at 6 p.m. Eastern. I got these targets published 1 hour and 10 minutes after the Wednesday session began. Okay. I try to get them out usually by 6:10 to 6:30. I was just running behind last night. Sometimes life happens. Now, because this broadcast is open to the public, if you're not a member or trial member, you didn't get these numbers last night. So you can grab a screenshot if you want. Or if you're watching after the fact on our YouTube channel, youtube.com/CFRN, just hit the pause button. Jot down the numbers that are important to you, because we'll walk through each market before we end the broadcast today. Now, when the report comes out, first thing you want to do is go to the 30-minute chart of whatever markets you trade. Make note of where price is at this time. It'll always be between these two numbers. And then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. Then, if price gets above the 30-minute BBC, you know it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. That part's super simple. The BBC is the green line you'll see on my charts. Doesn't matter what time frame you put it on or what market you put it on. If price is above it, then we're bullish and anticipate higher prices. If price gets below it, we're bearish and anticipate lower prices. Again, super simple. It's the Swiss Army knife of trading. BBC bull, bear, cross. Now with the logic alerts, I look left for you to spot previous swing highs and swing lows that could become potential obstacles to the trade. Purpose of the alerts is to help you become self-sufficient. This isn't just some trade calling room, okay, where you don't have to worry about learning how to trade. This is for people who actually want to learn how to trade, okay? And so the logic alerts give you an entry, an initial target, designed to help you get your goal for the day. Often there'll be a second, third, fourth, fifth target, and then a final trade to target. If it's a short alert, final trade to target will be the weekly trading zone below. If it's a long alert, the final trade to target will be the weekly trading zone above. Over time, you'll learn how price behaves at a weekly trading zone. Because price, and this is important because price is always trying to reach a weekly zone. If it's above the 30-minute BBC, it's trying to reach the zone above. If it's below the 30-minute BBC, it's trying to reach the zone below. From the moment the markets open Sunday night till they close Friday afternoon, price is always trying to get to the weekly trading zone. Only three things happen when price encounters a zone. 70% of the times consolidation, 20% of the times rejection, 10% of the time is what we call the slice. We've published the zones for our members every week since December 14th of 2009. They come out Monday morning at 6:15 a.m. Eastern. This way our members have an opportunity to get the zones on their charts before Wall Street even wakes up for the week. Once the zones are published, they're carved in stone for the entire week. They don't change in any way whatsoever. So, still got a few minutes here before Michael joins us. So let's go take a look at the daily chart of this is the S&P. Now, you probably don't trade the daily chart, and you may not trade the S&P, although most people do, but you may not. You may like crude or gold, or maybe you do stocks or whatever. Here's the deal. What I'm encouraging you to do is whatever you trade, whatever, spend 2 minutes with the daily chart before you drop down to your smaller time frames and actually begin trading. Now, there's a reason. Institutional traders, the ones who actually move price because of their account size and the size they trade in, they look at daily, weekly, and monthly charts the way we look at 30-minute charts, 5-minute charts, tick charts, and range charts. So being able to look over the shoulder of the guys who are actually going to move price up or down, that's a pretty neat trick. Except it's not a trick. It gives you important information. It helps you identify where major resistance is, where major support is. Yesterday, we talked about the fact that price had been rejected at the 50% fib extension, and that if price could get below the step line in blue and climbing, we would get a pullback to the BBC, and that there was potential support at the 38% fib extension. Now over here, it took us 1, 2, 3, 4 days. It was the 5th day that we finally broke through the resistance of that 38% fib extension. Coming back down, we expected it to be support. We talked about that a couple days. The interesting thing is yesterday we had after the broadcast, we had a red candle that came all the way down to the BBC. And you probably heard me say it 20 times yesterday and every day. Pull back to the BBC holds more often than not. What did it do? It held. Whether you're pulling up from below, like this, or pulling back from above, like this, pull back holds more often than not. Right here, it didn't hold. We know that eventually it won't hold. That keeps the markets fluid and tradable. Not holding here, the pullback not holding allowed us to go and put in a new all-time historic high at 50.66.5. This fib line's like 3 ticks off, about as close as you can get it on a daily. So price got below that support at the step line in blue and climbing, and furiously ran down to the BBC to the tick, and then bounced to close the session just above that 38% support. Now what have we done today? We've gone from support at the 38 up to resistance at the step line, and now we've pulled back about 50%, just looking at the daily candle. But again, whatever you trade, it may not be the S&P, you can identify where major areas of support and resistance are ahead of time. Now, that's not fortune telling, that's not witchcraft, it's not magic. It's understanding how price flows. those institutional traders that look at daily, weekly, and monthly charts the way we look at, the smaller time frames, do you think they've got these fibs on their chart? You better believe they do. So then the question becomes, well, okay, so are fibs real, or is it just some self-fulfilling prophecy because enough people believe in it? Well, number one, does it matter? And number two, yes, it is a very real thing. It's part of the fabric of the universe. It's in everything. From a sunflower to a rose to a pretty woman's face to your DNA. Everybody's probably at some point in their life seen that Fibonacci spiral. Represents the golden ratio. You don't have to spend 20 grand on fib drawing tools because every trading platform has them for free. On the DT Pro, there's your fib retracements, there's your fib extensions. So, is this glass half full or half empty? You decide. But where we found support, critical. All right. ES. The vertical line separates today, Wednesday, from yesterday, Tuesday, where we had the big sell-off. And back over here is Monday. When price rallies up to a zone, we expect resistance. When it drops to a zone, we expect support. 70% of the time, you'll get consolidation like this and like this. 20% of the time, you'll get rejection like this. See, this was a big red candle all the way down to the zone, 37/38. But by the time the 30-minute candle closed, price had been rejected. Now, this is a slice, but it's a very abnormal slice. Typically, what will happen when price slices through the zone 10% of the time on a 30-minute chart, like it's not even there, it'll retrace back to the zone it sliced through and then continue in the direction of the slice. There was so little buying pressure that we weren't able to pull all the way back to the zone we sliced through. But this is the zone that was published Monday morning at 6:15 a.m. Eastern. So here's where we opened last night. We just rolled sideways. Price gets above the BBC. We get that perfect stack. Price, step line, blue and climbing, BBC. There we go, right up to the target. We spike the zone, but then what happens? Resistance. Remember, when price moves up to a zone, we expect resistance. Even if it spikes it, that's okay. Both of these candles are still touching the zone. Now price got back below the BBC. You got red and falling overhead, which is bearish, but we're just consolidating at the BBC. Now some might ask, is this a valid window of opportunity? Yeah. Most certainly is. And then down here, how about that? Yep. But it looks like price wants to go up and test red and falling first before it drops. And it may not drop, it could overcome it. Then we'll have a window of opportunity. Up here. Okay. So simple. Here's the Dow. Here's where we opened last night. That same sideways move like we had on the ES. The market's still stunned from this incredible drop. We get above the BBC. Price, step line, blue and climbing. Calling for higher prices. We get a leg, a retracement, a leg. We hit the zone. Remember yesterday as we sliced through this zone. Now, when I was showing you that slice on the ES, see how we first We got rejected. Then we sliced, and when the slice ran out of steam, it retraced right back to the zone it sliced through, and then continued in the direction of the slice. We're getting a bearish cross right here, which gives us a window of opportunity right here. You only need 2 points on the S&P to get your goal for the day. You only need 20 points on the Dow to get your goal for the day. Michael, did I hear you in the background there? Okay, let's go to the Russell. Here's where we opened last night. We had blue and climbing below us. It walks us right up to the BBC, gets us above the BBC. There's that price, step line, blue and climbing, BBC. We make a run all the way up to the zone. See over here yesterday on the slice, see how we pulled back and we came down to the zone, got rejected, pulled up to the zone, got rejected, and then we traded through the zone, but closed the session back above it. And that took us to the next zone. Remember I said price is always trying to get to a weekly zone? Here, 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 and here. Now we had to kind of struggle through the zone to hit the target, but we did multiple times. If we get above this high right here, then 2005 to 2007 would be a pretty decent trade. But we got to overcome this resistance. You got a double top right here. And this resistance, and this resistance. 2005 to 2007 would give you your goal for the day. If the market comes unglued, loses its upward momentum, then you've got to watch this area right here where the bullish cross was. Because the first time price comes down to that area, whether it's today, a week from now, a month from now, or 10 years from now, will most likely be good support the first time down. Good enough for a bounce. Second time may take it out. On the NQ, we opened below the BBC. There he is.
Here I am. I'm here. I'm here. Sorry, I didn't have my microphone on. Here I am. I'm ready to go. If you're ready for me to go.
Yep. Guys, we'll pick up where we left off once Michael's done.
Okay. You going over. There it is. All right.
Looks good.
Yeah, so let's bring this up. Here we go. Good afternoon, everyone. Today is Wednesday, the 14th day of February, 2024. 14th day of February, 2024. Wow. Okay, so if you have not taken a free trial with us, go here at mytradingview.com and click on this button right here. If you click that button, you'll be brought to this registration page. Okay, on this registration page, all that we ask for is your phone number. If you have TradingView, give us a TradingView login ID. If you have NinjaTrader, give us a machine ID. No, there's nothing we can do about that right now, but give it to us anyway. And once you sign up for the free trial, you'll be sent everything that you need to get into the room in the morning. Now, yes, the spreadsheet. If you are going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. The spreadsheet goes back over 10 years. It's got over 10 years of data in it. And today is the 14th day of February 2024. We made 58 ticks on the NQ, nothing on the Russell, 2 ticks on crude, and we lost 10 on the ES. That put us at plus 185 on the morning session. Today, it took 46 minutes and 13 trades to get to the goal for the day. With 14 contracts on, we're at $1,610. That is over. Well, this morning, it took 46 minutes to do that. On month now, we're at $3,412 over 10 business days, averaging $341. That is with one contract. All right. On the year, we are now at an even $13,000. That is just, I love it when numbers come up perfectly even like that. We are at an even $13,000 over 31 days, averaging $419.35 per contract per morning session. That just seems weird, doesn't it? 13, 1, 2, 3, divided by 31. Yep, it's $419.35.48. So it's rounded a little bit. Anyway, so we stand on the year. Now, if you were to do the 24/20 blueprint, which means you work yourself up to 20 contracts over 24 months by adding 1 contract per month if you have earned enough money to achieve that extra contract. I started the 24/20 blueprint last year in January of 2023, and we are now in our 14th month, so we're on 14 contracts. This year, so far, I've had to work 13.08 hours getting the goal for the day. In the 31 days, I've had to work 13.08 hours total getting the goal for the day. And in that time, I've averaged $4,554 per hour. Okay, that is per hour. Now, some days it takes a little longer, and some days, like yesterday, it only takes a short time, 1 trade. But it is what it is. All right. So let's get into the trades now. On the crude oil, we had just 1 trade. 1 trade for 2 ticks. This one right here. I picked up 2 ticks on that trade. If you go back and look from the beginning, there was a blue arrow right here that if you got in at the right time, you wouldn't have stopped out. You would have come close to stopping out, but not stopped out. Had a nice trade there. I got 2 ticks on that. That was a ribbon trade right there. I know the mark's in here. This one triggered right on the news event when the crude inventories came out. It was a huge miss in crude today. And it triggered right there. I didn't get that. This was going into a weekly trading zone, so I wasn't doing that. This was during the break. So it was another blue arrow right there. I mean, every blue arrow worked today on crude. We just didn't have that many. This green arrow over here is working out pretty well. This one over here did not at all. Okay, and that was crude oil today. The Russell, we did have some trades on the Russell today, a couple. We didn't end up with anything though. We'll go back here. There's 1, there's 2. Hey, wait a minute. It says we did get something there. I don't recall what we got there, and it's probably another trade that was a break even before that. There it is right here. Okay, so we had a break even there. I got some profit on this Russell trade. I don't remember what we got on it. This one right here, got some profit on it. And then we had another break even here. So in the totals, there's a Russell trade in there. We got some profit. I don't remember what we got. And we had this break even here. There were not a ton of blue arrows today on the Russell. We had black arrows, green arrow, but not a lot of blue ones. Here's a blue one right here. That would have worked out fine. Here's a blue one right here. That would not have worked out at all. Blue one right here gave enough to go to break even. Blue one right here, borderline, probably enough to go to break even, and just enough to stop you out if it didn't. And that was it for the Russell. Now the ES, we had just a couple of trades on the ES today. Let's go back to the beginning. We had this one here that stopped us out. That was minus 8 ticks, and I'm sorry, minus 10 ticks. And we had another one that was break even somewhere. Somewhere we had a break even trade. I don't know where. Could have been right here. It's possible it was right there. But that blue arrow was really nice on the ES, and just not a ton of trades on the ES today. Now, the NQ. Now you're going to see a few different things here on the NQ. They're part of the. I got to say, I'm joking a little bit. All right. So there were different things in here today on the NQ that I was going over during the lesson plan for any of you guys who are in here right now that were not there in the last morning. I actually mixed a bus and route. Uh-oh. Be okay. Thank you. Thank you. Managed to not choke to death. So. All right. So what we had going on here this morning, TradingView. Yes, yes, it is always good when I do not choke to death. Well, for me anyway. Yeah. For all the beneficiaries. Well. Anyway, right here was our first trade on the NQ, I believe. Right? Wasn't that our first? Yeah, it was. We stopped out minus 20 ticks. Now, neither of the. This was a valid trade from a valid green arrow trade from TradingView, but it was not a valid trade for DT Pro and NinjaTrader. I'll just go through them. This right here was a valid trade for TradingView, trade for DT Pro and NinjaTrader. This right here was a valid trade for TradingView. We took it. We got 30 ticks on it. Not a valid trade for trading for DT Pro and NinjaTrader. This right here, a valid trade for TradingView. We got a break even. Not a valid trade for DT Pro and NinjaTrader. This right here, a valid trade for TradingView. We picked up 4 ticks on that. Not a valid trade for DT Pro and NinjaTrader. This black arrow right was on both, and this bounce off the ribbon right here was on both, but I didn't get either one of those. This blue arrow over here, we picked up another 4 ticks. Not a valid trade. This one right here was a valid trade on both. He had bullish in, the bar color was blue. He came to the ribbon had all 4 lines visible. So that was a valid trade on both. And on that one, we picked up, looks like 4 more ticks. Okay, the next one we had a break even. Then we got into the training, I believe. We didn't trade it. I trade again. We traded a lot. Apparently I didn't write them all down. Okay. Oh, there's one right there. They're all spread out like that. Let me squish this down like this. Okay. So in here, after this break even, I believe, I think we got 36 profit on that. So we went from 22 to 38 to 48 to 78, and then we stopped out and went down to 58. So that's the way it worked for TradingView. Now I'll just go through the trades that I'm showing in here, and the blue arrows. We'll go through those. This blue arrow right here was a trade with TradingView, but not a trade with DT Pro and NinjaTrader. We picked up 4 ticks on that. This was a trade on both. We picked up 30 ticks on that. This was a trade only on TradingView, and it did get some good profit in it. This was a trade on both, and actually no, that was not. That was just a trade on TradingView. We picked up profit on that. This was a trade on both, and that would have given some good profit. This was a trade on just TradingView. That would have stopped you out. This was a trade on just TradingView. That would have given you good 30 ticks in profit. This was a trade on both, including your break even. This was a trade on just TradingView, which would have given you an easy 36 in profit. This was a trade on just TradingView, which would have given you 15 ticks in profit. This was a trade on just TradingView, which would have given you probably pretty close to 30 ticks in profit. This was a trade on just TradingView, which would have stopped you out. It did stop me out. And I think that was my last trade this morning. During the break, this would have just been a trade on TradingView that would have stopped you out. And this right here, also a trade on TradingView, that would have stopped you out. This right here, also TradingView on a trade on TradingView only, that would have given you to make up for those stop outs. And that was it. So what I was doing this morning, we had part of the lesson plan this morning was shots, right? To compare and contrast the different slingshots over the bar colors and what the bar colors meant. So I did that this morning by doing everything together and just running through which one be trades with which one and taking the TradingView trades. Okay, now start the live stream up. I'm gonna start that up. And so I thought that was a different way to do it this morning. I don't think I've done it that way in the past. Ash Wednesday today. I didn't know it was Ash Wednesday today. I know it's Valentine's Day today. That is clearly evident by all this stuff. Yes, happy Ash Wednesday. Wow, Easter's early this year. All right. Well, let's get into the trading. Now, the live stream has begun, so before I get too far into the live stream, let me say, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on this purple thing right here, purple button right there. There's no credit card required for the trial. Oops. There's no credit card required. What the heck was that? I don't know. There's no credit card required for the trial. Click on that button. It's going to bring you to this registration page right here. Okay. Now, if you're watching the live stream, I want to show you how to get to another registration page. That's also important. Is this the right one? Yeah, this is the right one. It's going to be this register right here. Just fill it out. Make sure down at the bottom you give us a TradingView login ID so we can enable the set for you. All right, that is how you take the free trial. Now, simultaneously, there's another meeting going on right now. For those of you guys in the live stream, you can log into this meeting. And you'll hear me every now and then say something like I'm responding to someone. That's because Dwayne is talking to me in the other meeting, and I'm responding to him. To get into that meeting, you go here to mytradingiq.com. This other meeting is free all the time. Every day you can get into this meeting. And in that session, it begins at noon Eastern time. Dwayne starts out with a prayer, and then he goes into the Logic 247 concierge trade alerts. Okay, starts out with the word of the day and goes into Logic 247 concierge trade alerts, and then I come back on and do my part here. I do a 12:45 recap of the room this morning and 1 to 1:30 the live stream that we're in right now. That's what I do. But if you want to take part in both sides of the conversation, just click here. Again, go to mytradingiq.com and click here to get in that one. All right. There's no indicators or anything that come with that. There's nothing you have to give us. You just click that and you'll be sent a link to get into that every day. All right. Now, if you actually want to take a free trial with us, you go here to mytradingiq.com and click on the purple button right here. All right. No credit card for the trial. And on that one, you'll be sent to this registration page. Okay. Where we do ask for your login ID down here at the bottom, so we can enable the indicator set for you. All right, there's no credit required for either one. This is the other registration page. All right, no credit card required for either one. All right, that's how you get into the trial, and that's how you get into the other session that's going on right now. Now, as far as the trading goes, we get back into it right now. All right. This is a direction change here. We have all these black arrows because we keep coming out of the oversold on the ES, but it's not pulling back and bouncing off the ribbon. I mean, it's pretty clear that we're in an uptrend right here. So you could take a black arrow now, I suppose, if you got down near the ribbon. You weren't right up near the swing high. You can see the Russell is going up to the weekly trading zone right there, and the NQ is just going sideways in here. It doesn't really have anything for us right there. Okay. And today is the 14th day. 14th. All right, so on the NQ, we want that to pull back down and test it. And we have the weekly trend right here in between. So that will probably prevent us from taking a trade if it comes together the way it looks like it's going to. Okay. And now I want to show something. I tell the people about this anyway. Now, one of the things that you get when you sign up with us is you get access to the weekly trading zones. And the weekly trading zones are delivered every Monday morning, and they're good for the entire week. Right. Now, if you get to the lowest weekly trading zone on a Monday or Tuesday in the week, on Monday, I was saying at the end of the day on Monday, look to buy call options. Not call options, look to buy puts at the end of the day Monday. If it ends up anywhere near the high of the day, look to buy puts on Monday, because when the CPI comes out, I think it's going to go down. And it crashed down. And now there is a long-standing, 10-year plus standing thing that happens with the weekly trading zones. If you get to one of the extreme zones, either Monday or Tuesday in the week, by the end of the week, you're usually at the opposite end of the zones. So when it got down here yesterday, at the end of the day yesterday, that was the time to start some calls. When the sky is falling like this and everybody's thinking the bottom is just wide open, this is the time to buy the calls when it gets here. They're going to be dirt cheap. And by the end of the week, price should be up here. Okay. That's the way that it typically works out. So, right, this is, if I back this up a little bit, this is the beginning of an inverted head and shoulder right here. Okay. This huge bar right here, I was saying yesterday, we need to retrace on the ES more than we did. I was saying up to this level yesterday is what I was saying. It didn't get all the way up there. It did get up there today, and it stopped there, and it's pushing back down. Now, we'll see how it holds for the rest of the week, but I'm thinking by the end of the week, we should be higher than this level right here. Right? Probably 100% retracement of that. We probably won't get to the outer zone. Sometimes we do, but it should have a deeper retracement right here, I think. But this level here, what I was expecting the ES to do yesterday, it did today. And on the Russell, I was expecting the Russell to get up here yesterday. Still hasn't done that yet. But that also, I believe, got to its lowest weekly trading zone. No, it didn't. Okay, the Russell didn't get to its lowest zone, so that doesn't apply for the Russell. The NQ, though, the NQ did what I thought it was going to do yesterday. I thought it was going to get back up to here. It did that yesterday, and it's back up there again today. Right? But the NQ didn't get to its lowest zone either. So, just saying, when you have the weekly trading zones, there are certain things that happen, 2 or 3 times a year, and will just happen there. And let me see. Somebody had asked a question at the end of the session this morning in the live stream, and well, I guess it's not the right stream to put it in here. Interested again tomorrow. But I'm going to say to anybody that does watch the live stream, if you're watching after the fact right now, to get into the simultaneous meeting that's running with the live stream, so you can go to webinar. You just need to go here to the homepage at mytradingiq.com and so about halfway down the page, and click here. All right, begins at noon. And if you hear me talking to Dwayne, you would be hearing both sides of that conversation. Okay. All right. So we haven't had any trades yet. We're getting close to one here on the Russell. All right, we're almost down to the ribbon. We are oversold. We have bounced off the ribbon. We can take this. If you get an up close, it'll be a black arrow right now. Okay, now it'll be a blue arrow. 4.1 up to 4.9 on the Russell. 4.1 up to 4.9. Now, I know that ahead of time because I know how big bar is going to be. All right. So now it's going to be a little lower. It's going to be 4.0 up to 4.8 is what I'm going to buy. And again, I know that ahead of time because I know this bar is going to close right here at 4.7. If it closes up right now, it's going to close at 4.7. Right now, that number just dropped a little bit more. So now, the bottom of the bar, it just closed down. We're proud of that trade. But I didn't know ahead of time where that bar was going to close if it closed up. Right, this one right here is going to close up at 4.0, but I'm not going to be part of this because it's pulled back too deep now. Okay, over here on the ES, though, the ES is in the ribbon. Now, with 2 points from the bottom of the bar here on the ES, I still don't like the ES trade here either. Both the other indices are dropping, so the ES is probably going to drop with it. So, the first time the ES pulls back and touches the ribbon, after all those black arrows, not a good time to trade it right there. Okay, so over here on the Russell right now, we need that to pull back up there. We need this to pull back up here. We need this to pull back up here. That's what we're looking for. I thought we had a bond auction coming out right now. Didn't have a bond auction today. Let me see. Forex Factory. No, not today. Tomorrow, 8:30 a.m. Import prices, capacity utilization, HB housing. Friday we have a core PPI coming up. Yep. Yeah. So we have stuff coming in tomorrow. Big stuff coming in tomorrow. Core retail sales and all that stuff coming in tomorrow. So that's all in pre-market. And we do have something about. Oh, I missed that over there. Is it too late? It is too late to get into this on the NQ. I should have been looking over here and waiting for the down close on that to get that blue arrow. The Russell's also going here. All right. Well, this needs to put in a lower swing. And the Russell, I took the Russell. Here, I just grabbed the Russell. I know I shouldn't have done that. I was too late to get into it. But I did it anyway. So after 4 ticks in profit, I'm going to go up to stop to break even. It should go down below midpoint. That's what this dashed line is right here. This dashed red line is the midpoint. The weekly trading zones. It should get below that. Looks like it's going to stop me out. Hey, what the heck? What did I do wrong on that one? Okay, well, above my stop, I'm just getting out of that. That messed up. The automated thing messed up on that one. Anyway, I stopped out on this. Now, I should not have gotten into that. That was my mistake. I should not have gotten into that. The automated thing messed up. Let me shut it off and turn it back on. It does that sometimes. It's the second time today it did that on me. Did it once on crude this morning, too. Okay. Fixed. So I should not have gotten into that. That should have been a break-even trade. I got into it after it went enough to get the stop break-even. I deserve to stop out on that. Nice. Nobody really deserves to stop out. But if you make a mistake, now it's going to push down. We need it to put in a lower swing. We need this to also put in a lower swing. Now, we didn't get any color arrow on this. This was just to bounce off the ribbon right there. The rule says if the black line, if you're in a downtrend, the black line is in the red, and you touch the ribbon, you can short. You don't need to have the slingshot for that. Okay. So now they both just moved down really well. NQ and Russell. Now the NQ did put it in a lower swing, but the Russell hasn't done that yet. So Apple is still getting beat up. I haven't looked at this yet today. Wow, we got all the way up there. 52, that's what I was saying last month. The other end of the channel, we're getting up there. And there's the blue thing that I drew a little while ago. It's Bitcoin the way we'd expect it to behave. That's good. We need a down close to pull this out of the overbought right here. It's going to be a black arrow on the down close right now on that NQ. Now, it did not bounce off the ribbon this time. It doesn't have that far to go to get to the swing low, so this is a little risky trade here if you're going to take the black arrow. You might want to wait till it pulls back a little bit more. All right, the Russell did put in a lower swing, so now that's pulling back as well. And it's not overbought, so you don't have a trade here on the Russell right now. Okay, and there's the pullback that's deeper on both. All right, so the Russell's still not overbought. Still not overbought. We need to close on this bar to get it overbought. The NQ is, though, so that down close right there on the NQ is a valid trade. I know it didn't get an arrow on it because we didn't pull out of the overbought, but it's still a valid trade. That's the same one that I showed you a few minutes ago. If you go to the rules, that is a short trade without the slingshot. The Russell is giving the same thing right here. They're both giving short trades without the slingshot. If I go show you it in the rules, let's go here and I'll show you in the rules. Go here to mytrade.com. I'll show you the rules. They both did this without the slingshot. The black line in the ribbon must be on top and in the red. And price must touch the ribbon on pullback. The entry, it's got to have all this too. It's got to come after a higher or lower swing. Both of them have a lower swing. And it must be in the long-term trend direction. They were both in downtrends. Okay, so on both of them right here, where it came back up and hit the ribbon right there. It didn't come out of the overbought, so you didn't need the shot because the black was still in the red. So this one right here, Neither one of them did anything, but they both had that same setup. This one actually ended up giving a green arrow. That would have been enough to get the stop to break even. This didn't give any arrow. Went to a no trade zone by the time it came out of the overbought. This, I would think, is going to be going into a no trade zone pretty soon. It is now 116 today. 116. Let's see. All right, I'm going to put Bitcoin away for a second. Some distraction. So the ES is pulled all the way back up now. We're in the overbought and we're testing the ribbon on the ES. So let's bring this over. Now we'll pin it and we'll say the high of this bar right now is 87.75. So I'll sell 85.75 because I know how big this bar is going to be, right? It's going to have a down close right here at 86. Knowing where the top is, I know where the bottom is. It's going to have a down close right here at 86. Now that number just changed a little bit more. 88.50 down to 86.50 now. Right? It's got a high here of 88.50 and the low is down there at 86.75. So we can close down, down close. All right, now 88.75 down to 86.75 because the bar is going to close right here at 87. I know that ahead of time. I don't know for sure that this is going to be a trade though. It might knock them out of the overbought, but I'm going to risk it on this one. Okay. 88.75 down to 86.75. 2 points from the top of the bar. Maybe 8 ticks from the top of the bar. These are 7-tick range bars, so 8 ticks from the top is 1 tick below the bottom. That's why I know that's in the right place right now. Okay. So there it is. The down close it triggered me in. It gave me 1 tick of slippage. That's not too bad. Make sure our stop is 10 ticks away. And went right into a no trade zone at the same time. Well, that kind of stinks if we went into a no trade zone. But it's a valid trade, so I'm sticking it. I'm sticking with it. It actually isn't because it went into a no trade zone, but it did come out of the overbought. So I did everything right about that trade. Right, the outer band's a flat here on the NQ. So that blue arrow long is not really a good looking blue arrow long right there. All right, the Russell's actually starting to give a little bit of a long look right here. I'm hoping it's going to keep going down and not actually give a long trade. I think it's going to keep going down. But we'll see. The crude is oversold. The crude could actually give you a trade here. It could give a green arrow right now. Be 95 up to 77.03 on the crude. Right, on the ES, this number right down here is where it's trying to get down to. So that'll be enough to get the stop to break even. We need 4 ticks in profit to bump that stop to break even. Okay, I'm tempted to bump to break even now since it was a trade in the no trade zone. I do think it's going to go down to here at least. Now that is part of tomorrow's lesson plan. Learning how to read the DOM is part of tomorrow's lesson plan. See, the swing low is down here, so it should get down to 83, which is all the way down there. And if you were to do leg lengths, which was part of today's lesson plan, and take this leg length from here to here and reapply it from there to there, that would put you down here to 82.5. So we'll just wait it out. Let it do its thing. The crude has got a potential trade. It's got a low here of 95. Add 8 to that. It's going to put you at 03. Now, there's no guarantee it's going to be a trade because it might not pull out and be oversold. Okay. Let me just check and see if anybody's asked any questions in the live stream. Doesn't look like anybody has. If anybody does, just type it in. If you have any questions, you want to see any of the symbols or anything like that, just type in what you want to see. Okay. And we are in a no trade zone right here. So it wasn't really a valid trade. I did everything right getting into the trade, except when I went to a no trade zone. We're just sideways over here on this, which is sideways over here on this. I think everything's going to go down right here, except crude. Crude could go up. If you look at the bigger picture on all this stuff, just slide this over. This is kind of like a double top right here. It's dealing with coming off of right here. This was a leg down. It's actually in a horrible pattern right here that did end up stopping out. It's in a horrible pattern right here, the way that this is right now. That was not a valid trade. By the way, it was a short right here into the, it went into the no trade zone. If we weren't going in no trade zone, we would have had a green arrow on that trade. I probably should have bought my stop to break even when I had some profit in it. The crude is still a valid trade though, so far. It may become something. Right, over here on the NQ, we have not put in really a higher swing since we had the blue arrows, so we're not going to have any trade here. The Russell doesn't have anything. So markets are a little bit of a mess. Let's look at the Bitcoin again. Oops, sorry, that's not Bitcoin. So what's it going to do next is the real question. All right, we'd anticipated it would get up to here. It's almost there. It's not quite there yet, but PPI comes out. I think it'll get up there by Friday, by the end of the week. It'll be up here. Now, this was also the top of my channel right here. So if it retraces all the way back down to the bottom of the channel, then that's going to be probably over here, like 41,500, something like that. Depends how long it stretches it out. I mean, it stretched this out over a month, just about, right? Yeah, a month. Depends how long it stretches it out, how high the bottom of that channel gets. But I'm thinking 42 to 45,000 where the bottom of the channel will be. And if you're looking at the retracement, once it gets up to this level, assuming that it does get up to that level and it stops there, retracement puts you right here in the same place, just about, right? It's going to be right here, 45.5. So it all makes sense the way the markets are sort of positioned right now. It all makes sense to me that it would do that. Like it made it up to the top of the channel. Let's look at these other things that aren't making that much sense. And this needs to go up and put in a higher swing. Do 100% retracement of that pullback. It hasn't done that yet. And this one, when it comes around, come on, here it goes. This one did put in the higher swing already. It did do the 100% retracement and it's put in the higher swing. So where should this go now is this question, right? So where did I get this from? This was what I said, right? And we're right up there right now. This is what I said a little while ago. When did I say that? In December, I said this. And that was based upon this move from here to here, I think. Let's see what it was based on. Wait, let me put it back where it was, and then I'll just clone it. I'll clone it and take the other one right based on. It was this move right here. Okay, from here to, and then I went from here to here. And so now, when this does decide to pull back, if it only does a 50% retracement, if it only does a 50% retracement, let's start this kind of, we'll do it from here, from this level here down to here. Okay, so the 50% marker is down here. So that's just projecting that it's going to stop here as it puts in, as it finishes this leg length right here, that it stops here and it does a pullback, which is a retracement, 50% retracement of this leg up will put you down here. Then the next leg up would be here, but that's not going to be, that would be like out here somewhere, probably. Okay, we'll put another one over here in the future. Who knows what's going to happen? It could go straight up there right now. You know, this could keep moving all the way up to there. And if it does, then you'll have to just adjust that. That's no big deal. But if it stops right here at the end of that leg length that I said in December, then it would be a good time for it to pull back and do something else. And this ended up being no trade here on the crude oil. I had it waiting out there, but I never filled. I was looking at the up close on this bar at 03, but ended up with nothing there. The other markets are just going sideways. So I made 2 mistakes in here today, and I stopped out on both of them. That's what happens. And we're just about out of time. We have just 2.5 minutes left. So if anybody, well, I guess I can go into some other things here. If you haven't taken a free trial with us, I'll show you this bar. If you're watching right now and you're watching after the fact, whenever you're watching, go here to My Trading and take the free trial, right? No credit card required for the trial. Brings to the registration page, not that one, this one. Fill out this little form, and down here at the bottom, make sure you give us your TradingView login ID so we can enable the indicator set for you. Okay. The registration page to get into the other sessions running simultaneous with this is right here. Okay, to get to that registration page, again, you go to mytradingiq.com, and this one, you scroll down to the middle of the page right here. All right, and then you'll be able to access this through a GoToWebinar meeting that has actually more information than just this half an hour. It starts out at noon and it runs to usually about 2 o'clock in the afternoon. Click on that to watch that one. Right, you'll see the bigger picture stuff that we go over. Dwayne's going to go over the Logic 247 and Concierge Trade Alerts. He's already started and done probably 30 minutes of that. And I'll come back, probably do another 30 minutes when I'm the year, this is a spreadsheet. Now, the spreadsheet has our daily results from the morning session going back over 10 years. Right, over 10 years of data. This goes back to January 2nd of 2013 with all the daily data, all the data, and yearly data, monthly data on the markets that we trade. Right, so today in the room, we're plus 58 ticks on the NQ, ticks on crude oil, minus 10 ticks on the ES, plus $185 per contract this morning. On the month now, we're at $3,412 with one contract, averaging $341 per morning session. On the year, we're at an even $13,000 per contract over 31 business days, averaging $419 per contract per morning session. Okay. I'll get into that some other time. For now, though, take the free trial if you like what you see. Take the free trial, and we'll get you set up on your desktop so you'll be able to use the indicators. All right. That is going to be it for now. I'm going to have to pass it back out to fabulous Phoenix, Arizona. In Studio A, we'll look in South America's largest city park. Dwayne, if you are ready.
Yep. I am.
Excellent.
Doke, recap of the morning session.
Today it took, hang on, it took 36 minutes, I thought, right? Something like that. But wait, I went the wrong way on that. 46 minutes. 46 minutes and 13 trades this morning to get to $1,610.
Good job.
46 minutes. Thank you. Yes, 3 stop outs at the beginning. Had to overcome that.
Now, guys, I hope you heard that. 3 stop outs, back to back, and he kept going. See, if you're ever going to become a consistently profitable trader, you got to get to that point. Not where you get stopped out twice and go, oh, well, it's a bad day for trading. I better just, something different.
Nope. Just stick it out. There'll be another trade. I mean, you can stop trading for a few minutes and let the market start to trend, but
the goal for the day is to get your goal for the day. Sounds a little simplistic, but it's a true story. All right, so we looked off on the NQ. So we opened last night. We were below the BBC, but when we have this big of a down move, we know there's going to be a retracement because price doesn't travel in a straight line. It travels in legs. Leg, retrace, leg, retrace, leg, retrace. See here, found resistance right at the zone. Here, just below the zone at the BC. And then we get another leg. We get a retracement. So the question becomes now, are we going to go lower or higher? And we're in a straight, see how we're just sideways? We got blue and climbing. Then it turns to red and falling as we're just about to cross the BBC. So price is trapped. So you don't want to do anything here. You want to let price prove itself. What's it actually going to try to do? Remember, price is always trying to do one of two things. Break the previous swing high or the previous swing low. Like right now, price is trying to break this high or this low. The problem is it's got a weekly zone right here. It was resistance yesterday. It was resistance in the early morning hours. We did spike it on the 10 a.m. news and quickly reversed it the following half hour. And now we're just consolidating right at this long target. I mean, we did get to the target, but once this step line crossed blue and climbing, we knew we were due for a pullback to the BBC. We got it. Pullback holds more often than not. It gave us this up move. And then get below the BBC. And right here, see the bullish cross? Whenever you have a bullish cross that leads to an extended move, the first time price revisits that area, it will almost always be good support. And there it is. Okay. If you take nothing else away from today's broadcast, take that home. Same's true of a bearish cross, just in the opposite direction. Okay. Now, the last bearish cross we had is way up here in this particular market. But when price gets up there, and it will, whether it takes a week or 10 years, it will be good resistance. Most likely, first time up. Second time up, it may break through it. Okay. Bullish cross, support. Bearish cross, price gets back up there, resistance. Window of opportunity. There you go. Okay. All right, that covers all the indices. Crude oil. Here's where we opened last night. Consolidated along the weekly zone. You only need 10 ticks in crude to get your goal for the day. This candle opened at 77.99 and it ran up to 78.15. So $160 per contract traded. Then we pulled back to the BBC. The pullback held. Another leg. Again, price always moves in legs, not in a straight line. When you get a leg, expect a retracement. When you get a leg, expect a retracement. A leg and a retracement. When you get a big leg, well, expect a big retracement, right? We traded through BBC. We traded through the weekly zone. And we hit that short target to the tick. See? And what did we do? We bounced right back up to there, the zone. When we move up to a zone, we expect resistance till proven otherwise. And that looks like resistance to me. We overshot the zone, okay. This support that was put in yesterday is now support today, right here. You notice the step line is starting to hook to the right. When the step line crosses red and falling, that tells you that price is most likely going to pull back to the BBC. Just like when the step line crosses blue and climbing, price is most likely going to pull back to the BBC. Over and over, again and again. Gold, there's a huge sell-off in gold yesterday. Gold's still trying to find its footing. Now, we did hit the short target last night once, and then twice, and then a 3, and then a 4. Several times, okay? Now, this is the lowest weekly trading zone for gold, 96/97. The low of that candle is 96.4. Now, these are the zones that were published Monday morning at 6:15 a.m. Eastern. Remember, once they're published, they're carved in stone for the entire week. So we've hit the lowest zone on gold. Today's Wednesday, though, not Tuesday. Okay. However, we're above the BBC. We got blue and climbing below us. So it would appear logical that we're going to see an up move in gold, at least back to this zone, 2022/23. Probably not all today, but this is the beginning of it. Here's the sell-off. This is the transition to start moving back up. Silver, here's where we opened last night. We dropped to the target. When the market finds support, it will go look for resistance. When it finds resistance, it will go look for support. Red and falling turns to blue and climbing. We get above the BBC, and now look at this perfect stack all the way up. Amazing. Only takes 2 pennies in silver to get your goal for the day. Swing high there was 51.5. I think the entry on that logic alert was 52 to 54, if I recall correctly. So it never triggered. Stop right there, just shy of hitting the long target. Hit the short target a couple times. And on the euro, here's where we opened, pulled up to the BBC, pull back held, sent us down to the target and the zone, this week's lowest weekly zone. And then we get above the BBC. We get a nice run to the upside. Step line crosses. So now price will most likely retrace back to the BBC. Pull back holes more often than not, just like it did here. So be patient. Let price do what it's got to do. Let it prove itself. Okay. Now, could it just continue higher? Yes. But is that what typically happens once the step line crosses blue and climbing? No. Typically, when the step line crosses, you get a drop to the BBC. If it holds, you get another move to the upside. If it doesn't hold, then you'll drop to the bullish cross, which will most likely be good support. Keep that in mind. And here we are on the day. Overhead, we've got resistance at the step line and blue and climbing. In the 50% fib extension, and then the all-time historic high. Support is at the low of the day, at the 38% fib extension, the low of yesterday and of course the daily BBC. Below that, you got support times 2, 24% fib extension, and the 24% fib retracement. Become a lifetime member by going to mytradingiq.com. If you have any questions, call 949-42-EMINI or just email us, support@cfrn.net. The reason 9 out of 10 new traders fail is because they don't have a teacher. They buy books, they buy indicator sets and oscillators and algorithms and all kinds of stuff. But what they need is someone to teach them how to trade. I mean, you could literally become a brain surgeon with Google if the anesthesia didn't keep putting you to sleep, right? Doesn't matter what career path you choose, you're going to need somebody to teach you how to do the job. Trading is no different, yet 9 out of 10 people treat it differently. Oh, that looks really simple. Of course it does. That's all those videos. They're designed to make it look simple. On the other hand, in our live training room this morning, Michael got stopped out 3 times in a row coming out of the gate. Do we hide that? Do we sweep that under the carpet? No, because it's the truth about trading. It's the reality of being a trader. Okay? Things aren't always going to go your way. The ones who survive are the ones who don't waste time and treasure chasing the Holy Grail. They simply buckle down, learn how price flows the same across all markets and all time frames, and then show up every day and just do their job. When you become a passport holder, that's what we'll help you do. We'll help you learn how to do your job every day. Now, as a lifetime member with no recurring fees, ever, no upsells, and no nonsense, you not only have access to the live training room every trading day, but you also will have access to unlimited one-on-one private mentoring. The strategy that you learn and the indicators that you own for life as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETF, it doesn't matter. Price flows the same. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you'll also receive the Logic 247 alerts, the Concierge Trade alerts, and you'll be able to attend the members-only workshop, which happens every Thursday night at 8 p.m. Eastern. That's tomorrow night. That could be you. Everything a trader needs, all under one roof, one low price. mytradingiq.com, 949-42-EMINI, support@cfrn.net. Let's wrap it up with our good word for the day. Yesterday we talked about starting to live with purpose. Today, let's talk about loving one another as Jesus loves you. John 13:35. By this, all will know that you are my disciples, if you have love for one another. While the Bible doesn't give a description of what Jesus looks like, people have wrongly tried to portray him in paintings or films. What Jesus looks like is not important. It's what he represents that matters. In John 13, Jesus tells us he is all about what he is all about and what he wants us to be all about. And it's love. In the upper room, Jesus recognized that his time was short. The cross was looming. Judas was about to betray him, and he had to prepare his disciples to continue without him. It's like asking a pastor, if you had one last sermon, what would it be? Or asking a teacher, what great truth would you most like to convey to your students? Or asking parents, if you could tell your kids only one thing, what would it be? Jesus spells it out. A new commandment I give to you, that you love one another as I have loved you, that you also love one another. By this, all will know that you are my disciples, if you have love for one another. It's John 13, 34 and 35. Like a last will and testament, Jesus' final message is important, not only because of its content, but because of its tone and timing. It sums up his life and our responsibility to God and to others to love them. Now, since love isn't what you say, but what you do, today go out and find practical ways to express God's love to whoever you meet. They will feel good, and you will too. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.